I'll formally open the Antipodes AGM. My name is Jonathan Trollope. Before we move to the formal agenda, I'll introduce my fellow board members, Lorraine Behrens, Chris Cuff, Alex Eilenfeld, and Andrew Finley. Calvin Kwok, who's the company secretary, is also present. We have the auditor, Scott Woodett, who's able to answer any questions you may have in relation to the 2019 financial statements. I've been informed by the company secretary that we have a quorum, and I'll now declare the meeting open. I'm advised there are no apologies from anyone recorded. Does anybody have an apology they wish to provide on behalf of any shareholder? Okay, thank you. The agenda for today's meeting is the chairman's address and the formal business, and then the investment update and Q&A. But again, shareholders are very welcome to ask questions before that during this meeting. In terms of the chairman's address, this is on the website, and so you don't need to take notes. But as you're aware, it was established in 2016 to provide shareholders with access to a long-short global securities investment portfolio with a currency overlay. The investment portfolio is managed by Antipodes Partners. Jacob Mitchell will be here later today in the investment presentation and will be able to speak more to that. The aim of the manager is to build portfolios with a capital preservation focus, seeking to purchase securities in what it considers to be great businesses not valued as such. In terms of the investment objectives are to provide capital growth and income through investing in a concentrated portfolio predominantly comprised of long and short positions in international securities and actively managed with a focus on capital preservation, and to achieve returns in excess of the benchmark, which is the MSCI All Countries World Index in AUD with reduced levels of risk. In each case, over a full investment cycle, which the manager considers to be typically a period of 3 to 5 years, we acknowledge that to date the excess return objective has not been achieved. The manager's presentation will cover the investment manager's views on why this is the case and why the investment manager believes the situation can be turned around. In terms of the company, I've already introduced the board of directors. The number of shares on issue is 543 million. The current share price is 93.5 cents. We acknowledge that that's a discount to NTA. Again, I'll be addressing that shortly. The NTA is $1.13 on a post-tax basis and $1.12.5 on a pre-tax basis. In terms of dividend, the company intends to pay a dividend at least annually, subject to available profits, cash flow and franking credits. As at 30 September 2019, the company's profit reserve had a closing balance of approximately 8.3 cents, and together with its franking account balance, this has sufficient reserves to pay dividends at the current rate over the next 18 months to 2 years. In line with this, the directors are pleased to note that the company paid a fully franked dividend of 2.5 cents per share, franked as to 50% on 14 October 2019, taking the full dividend to 4.5% when including the interim dividend of 2 cents paid in March 2019. In terms of company performance, the annualized company NTA performance, that's not taking into account the share price, for the period from inception to 30 September 2019 was 9.2%. So this measures the change in NTA before all income taxes and adjusted for dividends paid and the dilutionary effect of options granted to shareholders on the listing of the company. The annualized total shareholder return, or TSR performance, which measures the change in share price adjusted for any dividends paid for the same period, was minus 1.7%. The company's share price at the time that this calculation was made was 95.5 cents compared to an issue price of $1.10 and dividends of 9.5 cents paid during the period. Based on the company's share price at 30 September 2019, APL shares are trading at a 14.7% discount to the pre-tax NTA. Given the company has an absolute return focus, we acknowledge the 9.2% annualized return against NPA since inception and the defensiveness in the portfolio in down markets. We are, however, cognizant that one of the long-term objectives of the company is to outperform the benchmark. And while the company had a very solid start in 2019, the investment portfolio's performance has lagged a strongly rising market in the last year. And we'll hear more about this from Jacob Mitchell when he speaks at the investment presentation. In terms of the discount to the NTA, as I mentioned, the discount is 14.7%, approximately 15%. This is an unsatisfactory position, and we remain committed to addressing this. We do note that APL is not unique in this position. The majority of LICs are trading at a material discount, but that doesn't mean that we shouldn't be doing anything. We're taking active measures to address this. We moved from monthly to weekly NTAs and increasing shareholder communication and investor roadshows. In August 2019, we instituted an on-market share buyback, and that was after conducting significant research of shareholders and also evaluating the effectiveness of buybacks across the market as a whole. The buyback we announced was for a period of 12 months, and so far approximately 8.7 million or 1.5% of the shares on issue of APL have been bought back. We're actively monitoring this. It's premature to assess the overall effectiveness, but obviously at the next board meeting, if not before, we'll be looking at it again and evaluating it. In terms of shareholder engagement, we are actively committed through the support provided by Pinnacle to increase communication and transparencies with investors and the broader market. The company sends out investment videos and insights, dividend updates, weekly NTA announcements, and obviously the statutory half and full year financial results and media commentary. The company and the investment manager also attend regularly investment conferences, and if shareholders have not provided their email addresses, please do so that we can make our communication with you better going forward.